Let's start with MDR. So if you're buying two or more properties, okay, from the same seller, you can claim multiple dwellings relief. And what that means is you work out the average cost. It's a bit like what we talked about yesterday for granny annexes, yeah? And in fact, I'll do an example for you. If Shamila, you can pull up the SDLT page with the tax rates. That saves me skipping a slide over here. So let's do an example together. Okay. So sell, you're buying two properties for two different prices. One's going to be a cheap one, one's going to be an expensive one. Sell. How much is the cheap one for?
40,000. 50,000.
She's a good negotiator.
80,000.
Where are you buying these, by the way?
Actually, that is the price of a piece of land in Leeds.
Yeah? I thought Leeds was expensive.
Depends which postcode you're on.
Yeah? Okay, let's say 100,000. And then you're buying an expensive one?
500,000.
And let's just assume these are your second or additional properties. So on the first one, the SDLT is going to be 3%, yeah, because it's second and additional, okay? So you got the $3,000 here, but nothing else, yeah? Because the first £125,000 is SDLT free. On this one here, we've got 3%, yeah, which is 15,000. And now let's work out the SDLT. So this is where you're going to have to help me, Shamila, and somebody else with a calculator possibly. So the first...
Not maths.
Not today?
Not maths.
Yeah.
Okay, so what do you want me to work out?
So 125,000 times 2%,
125.
which is going to give you
1,000 times 2%.
$2,500, yeah?
Yeah.
So we've got $2,500, and then, so 2%, $2,500. And then you've got 5% for the balance of 250,000. So if you do, yeah?
250,000.
Yeah. Which is going to be 12,500.
12,500, yeah.
Yep. Okay. So 12.5 plus 2.5 gives you 15. 15 plus 15, 30,000, yeah? So here you're paying £30,000, and here you're paying £3,000, so you're paying 33,000, yeah? Now if you're buying from the same seller at the same time, 600 grand. Then you've got a second option, which is 100 grand plus 500 grand give you 600 grand, yeah? You divide that by 2, so you're buying each property for 300,000, yeah? Now Shamila, we're going to work out the SDLT on £300,000. So the 3%, yeah, is going to give us 9,000, yeah? And then the first 125, there's nothing there. The next 125 is 2%, okay, which gives us 2,500, yeah? So that gets us to 250, and then 50 grand at 5%, which gives us another 2.5 grand, yeah? So 5 plus 9, 14,000, okay? So it's £14,000 per property, times 2 gives us 28,000, yeah? Because we got two properties, yeah? So we compare 28,000, and I'm doing this for you, for your benefit, so you can work it out, times 30,000. So in this case, it's not a big saving, but it sometimes can be a big saving. Yeah? Sorry, 33, yeah, so it's a £5,000 saving, which isn't bad, is it? Yeah? So if you're buying two or more properties from the same person, you can claim multiple dwellings relief. if you're buying 6 or more from the same person, you can use MDR, or you can use non-residential rate of SDLT, which might work out lower for you. So in which case, if Tahir, you were buying 6 flats from somebody, you'd work out the SDLT on the standard rate, then you'd work out MDR, and then you would work out non-residential rates, whichever one's the least, that's the option you choose. With MDR, by the way, and this can happen, the figure could end up being 0. It isn't, but it could end up being 0. If it is 0, for whatever reason, you have to pay a minimum of 1% SDLT on the entire transaction. Okay, so it can never be 0. 1% is the least you can pay. Okay.
How can you check the non-residential rates?
I think I've got them here. So first 150, no SDLT.
Okay.
Next 100,000, 2%.
Next 100,000.
And that takes you to 250. Anything over 250, 5%.
Okay, thank you.
%. Everybody familiar with the additional 3%? Yep. When you buy a second. So, Julie, you live in your own home. You then have a buy-to-let property as well. You're going to buy a second new home. You pay 3% on that. Okay, because you could now got 3 properties in total. Is there any way you can claim back the 3% on your second new home at some point in the future?
If you sell the first one, isn't it?
If you sell the first one, yeah. Yeah.
I can't remember what the period.
A lot of people don't know that, 3 years. A lot of people don't know that.
Is
Yeah.
that if you've lived in it for more than 3 years?
No, within
No.
or within 3
No,
years.
just
Within
yeah.
3 years of buying.
If you sell it within 3 years of buying your new one, yeah.
And how do you do that?
You have to make a reclaim with HMRC, which is a pain in the backside, by the way. Sell, it's not easy. It really is a pain.
So if the trade is longer than 3 years, you lose that.
Yeah.
What if you sell to your own company and you go in?
Yeah, that's the advice we give people usually.
Okay.
Is sell to your own company and pay some SDLT, because usually, not all the time, usually most people are upgrading, okay, or upsizing rather than downsizing. So then the new home costs a lot more than their current home. So to transfer the current home into a limited company, the SDLT is less than what they're paying on the new home at the 3%. Yeah. So.
That makes sense.
Yeah. Or if you sell your home, then and you replace it within 3 years, then you don't pay the 3% either. So sometimes you might sell your own home and you might move abroad for a year. You come back, as long as you buy the replacement within 3 years, no 3% to pay either. Yeah?
Even if you have a company house that you own through a company, if your company bought a house, say mixed commercial, semi-commercial, can you live on the upstairs and you just work downstairs? Can you do that?
In a limited company?
Yeah, limited.
No.
Your company.
You can live in it, but you've got to pay more tax. I'll cover that for you in a few slides. Yeah.
Do you know the CGT that you will gain from selling your own home? People sometimes say you could move it into other investment to not pay the CGT.
No, that only applies if you sell a business, and then you can invest in an enterprise investment scheme, okay, and defer the CGT. If you keep your money in there for 5 years, then you don't pay the CGT, and any profit you make, you don't pay any income tax either.
Right.
But it has to be a trading business, not an investment business. Okay, so that's one of the additional tax reliefs available to trading businesses.
Just a quick one, Shaz. You know when you sell it back in 3 years, what's the lowest time you can live in the house?
Doesn't matter how long you live in it. No, No? As long as you sell the first one within 3 years of buying the second one, you get a 3% back. So here you've got the rates. If you're not resident in the UK, you pay, which I assume doesn't apply to anybody here, you pay an additional 2% SDLT when you buy property in the UK. Okay? So then I think that's probably going to go up in future years. But this is the point I was making yesterday. As the value of the property goes up, the rate of SDLT goes up as well. So the more expensive the property, the more SDLT you're paying as a percentage. And that's why it helps if you're buying 2 or more properties, or if you've got a granny annex, because you're then pushing the value down, so you're paying a lower percentage, yeah? So this was the question somebody was asking earlier. I think, was it you? Who was asking about, I think it was Caroline. How long do you live in a property for it to qualify for your principal private residence? And there's no period. I mean, there's accountants who will tell you 3 months, 6 months. There's no period. It depends on the quality of occupation. So how do we justify or substantiate quality of occupation?
Utility bills, just change the bills and being there for a while.
That's proof of occupation.
Okay.
That's not quality of occupation.
Oh, you just need to live there, don't you?
Yeah.
For whatever period of time.
Okay.
Properly live there.
But okay, so when you probably live there,
Yeah.
how do you demonstrate that it was a quality occupation as opposed to an occupation of convenience to claim a tax relief?
You're not actively living somewhere else. The children go to the local school.
Ah, yes, that is it. So local school. Caroline, I think you and I already talked about this, so you can just listen in. So local school. Anything else? Sorry, Sunil, you said? Yeah, doctor and dentist. Laura, you said electoral register, yeah? Yeah. Anything else?
Place of worship.
Place of worship. Yeah. So local place of worship. Anything else?
Transport, closer to certain transport.
No. So involvement in the community, yeah. So if you're helping a local charity or local school, whatever people want to do locally, shows that that you're involved with the community, yeah. So these are the things, some of the things that you have to do in order to show it was your intention to become part of that community and live in that house or that property, yeah. And if you do this, I think even if you live in the house for a month, same PPR, yeah. If you don't do this, including changing all the bills into your name, you moving your bank, telling HMRC you've moved as well, all that kind of stuff, all to the address, this stuff here, you're okay. But don't.
Sorry, so you don't need to move your bank?
You have to.
No, yeah.
Yeah, you have to move everything. Here we go, this is the important bit. So, if you buy a property in a limited company, which a lot of people do, and it's in the UK, and it's worth more than £500,000, and on the 1st of April 2012 going forward, and is owned by a company, fully or partly, so this could be a mixed partnership, Joanna, yeah? And that property is not rented out on a commercial basis, i.e. you live in the property, or you allow families, your family members or your children to live in the property, you have to pay additional tax every single year. Based on the value of the property, that's how much tax you would pay. So the property is less than 500 grand, you're okay. More than 500 grand to £1 million, you're paying £3,500 every year. Between 1 to 2 million, 7,000, and it goes up and up and up and up. And if you're fortunate enough to have a property worth 20 million, you're paying £220,000 a year. Yeah?
Yeah.
That's going to be Utah here probably in 5 years' time. Yeah?
Yeah, happy to pay that.
Yeah? But you're probably not going to buy the property in the company name anyway, buy in your name. Okay? So it has to be let to a third party on a commercial basis or open to the public. The other stuff doesn't apply to you really. Simply speaking, what you need to know is do not buy a property that you're going to live in through a company. So apart from paying ATED, if you buy a property through a company that you're going to live in, what's the main tax relief you're going to lose out on?
All the capital gains.
Yeah, the principal private residence relief, because that's only available to individuals and not companies, yeah? So the home that you're going to live in, always have it in your own name. That's the point here, yeah? And this is, I think, really this was introduced for foreign investors who end up buying property in a limited company and then they live in that property. This doesn't really affect many people in the UK, but it's important for you to know how it works, yeah? Okay, commercial rates. So all of these types of property or land qualify for non-residential rates of SDLT. If you buy 6 or more, like I said earlier, you pay non-residential rates, yeah. Mixed use property, which we talked about yesterday, Shamila, with your dad's example, okay. Downstairs shop, upstairs residential, you pay commercial rates, and in fact here's the rates for you, yeah?
5%.
Yeah, and this is going to work out to be cheaper usually because if you have a flat upstairs and it's your second or additional property, you'd have to pay the extra 3%. But because you're buying it as a mixed property, no additional 3% to pay. Everybody with that?
Yeah.
That's
Okay.
worth it on that alone. Potentially, yeah.
Especially where your dad's property is or your family's property is, yeah? Because that's worth quite a bit of money. Okay, this is a nasty one. So, if you buy 2 or more properties from the same person at different times, that will be treated as a linked transaction. Okay, what that means, Julie, is you'll have to pay a higher rate of SDLT on the second property because it's going to be deemed as though you've bought both properties together. Make sense or no?
Well, they get added on.
They get added on, yeah.
Even
So
though they're on separate titles and bought a different.
yeah,
Why would
Yeah.
they do it? And is there any time period, like, between buying the two?
That's bizarre, isn't it? Because it's going the other way from buying them together.
it's introduced at a time when people used to sell properties piecemeal to try and avoid certain SDLT liabilities. If you ask most solicitors, Julie, they say to you, there's no time limit per se. But I think the longer the interval, the more likely this won't apply to you. The shorter the interval, the more likely. If it's 6 months, a year, 18 months, I think you've got a problem. Yeah. So they add the price together. So the first property you bought for 500 grand, the second property you're buying for 500 grand, okay. And you know if you buy a property for £1 million, okay, you've got to pay more SDLT on the second £500,000. So it's going to be very penal. So you want to try and avoid that. If you're buying properties from somebody who's still selling 3 or 4, try and buy them in one go, and they can just claim multiple dwellings relief, yeah? Because these will work out cheaper for you.
So you can't then claim multiple dwellings
No.
relief on that?
No,
Because I think
because you're only buying one property at that time.
So you're the buyer, you have to pay for that.
You're going to pay for that, yeah. So don't buy a second property from the same person unless it's been
Is it the same development or is it the same developer? There could be
same entity,
the selling entity.
yeah.
So they could have another unit somewhere else or another development somewhere else.
we have portfolio landlord.
No, I mean if it was like a developer, let's say it's, I don't know, Barclay Homes or something. They got a unit here, they got a unit.
No, then you'll be fine.
That's fine. It's
Then-
the same overall building.
No, same overall building if you're buying from Barclay Homes,
Yeah.
or if you're buying from an individual. So let's say Joanna's selling 3 properties. She's got one in Leeds, one in Peterborough,
Okay.
one in Manchester. You buy the first one in Leeds, second one in Manchester in 6 months' time for a reason. And the second one, you guess total value is added together. So on the second one, you'll pay more SDLT because it pushes you into the higher rates.
So one seller, multiple locations, still liable.
Yes. Yeah. So and it's quite a nasty rule. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.